We're broadcasting live on independent television. This is Business This Week, reaching you on ITV. I am Lawrence Osifo, your anchor, and it's a great delight to have you join us on the program this beautiful Friday afternoon. We're here again to talk about the Nigerian economy, to make sense out of the policies of government that shaping the economy of Nigeria. But today, our focus will be on the insurance sector. Yeah, on Wednesday, President Bola Tinubu assented to a bill, which is the Nigerian Insurance Industry Reform Bill, which is now an act. So after a presidential assent to a bill, it becomes an act, becomes a law. We follow through what is on that bill. So now we have the Nigerian Insurance Industry Reform Act amended 2025. Short code, we call it NIRA, not Naira, but NIRA. So we'll be making sense out of the whole bill, the now a law, now an act, what we stand to gain in the insurance sector, what the people in the insurance sector stand to gain. The bill was, it has been lingering for quite long. The last time that bill was amended or touched was, I think, 10 years ago, thereabout. But now we now have another act for 2025, which the industry, the insurance industry, will be working with. So we'll be making sense out of that act now, formerly a bill, now an act, how it's going to impact the insurance sector, those that are in the insurance sector, what we stand to gain. All right, so I have my guest, who is someone that is in the insurance sector, somebody who understands insurance very well. He's a chartered and certified insurer with the Nigerian Institute of Insurance based in Benin. I have Stephen Ovolen, who joins me live via Zoom on the program this afternoon. Good afternoon, Stephen, and good to have you join us.
Good afternoon, Mr.
All right, how you doing this afternoon? Okay, before we delve into the act, before we start talking about it, let me read through some of the preambles I have here. Now, President Bola Tinubu have signed the Nigerian Insurance Industry Reform Bill into law, marking a landmark overhaul of the country's insurance sector. The president stated that this reform would play a key role in achieving a $1 trillion economy by the year 2030. According to the National Insurance Commission, NICOM, the new Nigerian Insurance Industry Reform Act 2025 is expected to boost the sector's contribution to Nigeria's gross domestic product, GDP. Following the signing, the volume of insurance stock added to the Nigerian Exchange Limited, which surged to 299.15% at the close of trading on Wednesday on the floor of the Nigerian Exchange Limited. The Nigerian Insurance Industry Reform Act 2025 repealed the consolidated several outdated insurance law into a single modern legal framework. The Act also provides for a comprehensive regulation and supervision of all insurance and reinsurance businesses operating within Nigeria. NIRA 2025 introduces the critical measures such as stringent capital requirements to ensure that the financial soundness of operators, enforcement of compulsory insurance policies to enhance consumer protection, digitization of the insurance market, improve access to efficiency, zero tolerance to the delays in claims and settlement, creating a dedicated policyholder protection fund, especially in cases of insolvency, and expanded participation in regional insurance schemes, including the ECOWAS Brown Card system. Analysts have also projected that the insurance sector stock would surge on the back of the new act. Okay, let me come to you now, Stephen. Let's start making sense out of the new act, formerly a bill, now a law after the presidential assent. First, give us an overview. What do we expect as a certified insurer that you are, and somebody who have more experience in the insurance sector? What do we stand to gain from this new act? The former one has been repealed. When I say we, I mean the Nigerian people, the people who do their day-to-day activities, whether you have a stock with the Nigerian Exchange Limited, or you are in the insurance sector. Basically, let's just start up with that. What do we stand to gain from this new act?
Okay. Thank you so much. And I really want to appreciate your interest because you are not an insurance practitioner, but you've been able to aggregate the public's interest into this perspective, which I think is good. The general overview of this Nigerian Insurance Industry Reform Act, its main objective is to increase the risk-based capital and to extend furthermore to the area of economic development, attracting foreign investment, protect policyholders, and to enhancing further framework of insurance penetration, supervision, and compliance. So generally, these are the forerunners and latitude of the Nigerian Insurance Reform Act as amended away from the 2003 Insurance Act. The general overview is to create a level playing field whereby the framework for operation, supervision, and customers protection, can have a level playing field whereby everybody will be regulated. Insurance penetration in Nigeria is another tendency that will further boost our risk-based capital. As you can see from this reform, increase the capital base for general insurance underwriting firms from 3 billion to 15 billion. For the life underwriting, increase it from 2 billion, currently it's 10 billion. And for composites, that's to say, underwriters that can provide policies for both general and life policies, they've increased it to 25 billion. And as you can see, the robust increase is not just to sideline or restrain insurance companies' capital base, it's for them to have enough playing field whereby they can attract foreign participation and foreign investment, which in turn will improve our GDP. So that is just the set objective, and that is the work and the focus. So let me stop here for that questions.
Are you there, Stephen? Can you still hear me?
Yes.
Okay, okay. Now, the next question I have here would be, what would be the impact? How would it change the insurance industry generally? Because we've seen, would I say fear now, that people really don't insure their properties in this part of the world, unlike what we see in other parts of the climb, where it seems like it's mandated for people to insure their properties. In Nigeria, that's the only country where you see people buy cars for as high as maybe 10 million naira, but they wouldn't want to pay an insurance company to insure it for as low as maybe 100,000 naira. What will be the impact or the change this NIRA Act 2025 will eventually cause in the insurance sector?
Okay. The motor vehicle insurance that you give as an example is part of the compulsory insurance the Act is even going after. And also the insurance penetration index. Is going to increase our capital base and is going to provide more solvency for claims payments. Because if the insurance industry is robust and very solvent, the tendency to pay more claims will be there, which is our social responsibility and our main function and objective to provide our role as the risk mechanism, because investment must be protected. If you have invested, you've taken a loan for your motor vehicle purchase, and you've done insurance on it, that is the risk-based component. It lies on the insurance industry or company to protect it. Because once it is accidented or damaged or stolen, it is the onus of the insurance company you insure the vehicle with to provide succor by way of reimbursement, by way of reinstatement, and by way of replacement. So if the insurance company is solvent, the need for risk avoidance or negligence will not be there on the part of the insurance company. As far as you have reported the claim, the joy of paying you back for whatever has been damaged in the vehicle or stolen will be there. But in a situation where there is no capital base enough for risk protection, that is where you begin to see excuses and policy avoidance. But in this current bill, it will create, look at the synergy and look at the provision. It has created room for foreign investments to come in, not just coming in to invest in the insurance industry. Currently, right now, we are having some foreign investors. If I can mention a few, we have the alliance of Salam, we have the alliance of, and we also have Inisia, and some couple of South African and European insurance investors that are in the country. And they are very happy because of the dividends they've started seeing, because it's an investment that is yet untapped, because we rate the largest office in Africa because of our size. We have the largest population by virtue of that aspect. We run the biggest IT, not just in Africa, people to some part of Southeast Asia and Europe. So the investment potential is huge. And it is only when we have a solid base, risk-based capital that is robust, building up to, big solvency. That's why you see the investment. And just as I said earlier, when investment, come in via insurance, it reflects itself in our GDP. And the current target set by the federal government of $1 trillion marginal investment will be actualized, and it will not go down to the common man on the street. It will now attract further blue chip investment, IT infrastructure, infrastructure that will trickle down to manufacturing, production, utilities, and other aspects. Set of communication. So that is the essence and beauty of this policy. That is dynamic. So that is what is going to benefit us as a country, as a people, as industry, in every facet of the economy. Because there will be enough robust risk protection for us.
All right. We'll have to go on a short break now. When we return from the break, we'll be looking at the consumer protection and the impact on an already existing system. We're going to look at how generally this new act will impact the already existing insurance system that we have. But that will be after this break. We'll go on a short break on the program. Stay with us. Thank you so much for staying with us still on the program. We've been looking at the new amendment, or rather amended act of the Nigerian Insurance Reform Act, known as NIRA 2025, that was just passed into law, signed into law by President Bola Tinubu. We're making sense, understanding the act and the insurance sector, how it will definitely improve the insurance sector. And I still have my guest, who is a certified and a chartered insurer, Stephen Ovolen, with the Nigerian Institute of Insurance in Benin, helping us to make sense out of the new act, formerly a bill. Now, as we begin to wind down the conversation, let's look at consumer protection and its impact on the already existing system. Like I said earlier, a country where people seem not to believe in insuring properties, even when you bring health insurance in their office, in their place of work, some persons will just even want to evade it by virtue of, I don't know, what would definitely be the consumer protection. So those who are already in the system, that have keyed into the insurance system, how would their interest be protected with this new act?
Yeah, it will be protected. For that part of inflation you mentioned is a component of their per capita income when you compare it to other countries of Africa and the world. Our per capita income is way, way too low. So I wouldn't really blame avoidance on that aspect on the part of some civil servants. But that is to say, we are still hoping for improvement in the minimum wage because every aspect is also tied to the disposable income a particular worker would want to release at the point of demand. But you see, this Naira Reform Act mandates enforcement of compulsory insurance and provides compliance rules and mechanisms to everybody. When we talk about making it compulsory, the health insurance you mentioned about is not something that can be compromised. In other parts of the world, like in Europe and in US and even South Africa, even Kenya and Zimbabwe, I think they have more articulated, robust, compulsory insurance enforcement. You cannot avoid it because everything is automated even before you receive your take home. I think we are still advancing. Surprising enough, Ghana also has a very robust implementation of insurance policy. And the era also is looking at data framework in this era of IT. You don't need to go to a certain and insurance office to declare your interest in any policy. You can just get access to whichever underwriter you want to place your transaction through your handsets, through your phone, through your app. So it has also provided penetration through digital framework, IT portals, where you can just access and look at all the rates available and the charges and the policy cover for each and every risk. Um, it is well defined in the Act, and I think the National Insurance Commission that is having able leadership, they already drew this template, and I think they will be working tirelessly to dispense the dividends of this act to members of the public. You see, they have cascaded it to an extent whereby the ordinary man in your village can also access insurance policy,
Okay.
digitally. And there's another type of insurance we are not really used to, but it's already been implemented. We call it micro insurance. We also have a big insurance. We have a careful and other life insurance policy that are micro. That's to say, a single individual can access immediately. Coverage are also limited to a particular sum insured or sum assured. But I think the ordinary man in the village henceforth can access these
All right.
policies,
Okay.
once implementation starts. Yes.
Okay, Mr. Stephen, as we wrap up, the general impact on the economy and your final words before we go.
The general impact on the economy is going to increase our GDP. It's going to increase production. It's going to increase per capita income. It's going to increase your marginal propensity to consume. and it's going to increase your marginal potential to save, because the economy indicators and performance are all intertwined to one general aggregate, which is increase in income.
All right.
Thank you so much.
Okay. Thank you very much, Mr. Stephen Ovolen, a chartered insurer with the Nigerian Institute of Insurance in Benin. Thank you for your time. We appreciate you for giving us an insight into this new amended NIRA Act 2025. Thank you so much for your time. That's the size of our package on the show today. It's been a great time trying to understand the new act. We'll be back again next week with another exciting episode on the show. On behalf of my team right here, we thank you for being a part of the show from start to beginning. I'm Lawrence Osifo. See you again. Bye for now.